Good day. How are you? I'm a bit sick, so I apologize in advance for my voice and all that. Just, it's about the news we had yesterday at noon. Let's see, when the academic office says this news, let's not share it with others yet. Let's see what Paul wants to do. Okay, so let's see whether the US government opens up or not. 2 points. First, starting today, that contest begins for those who, let me explain, within the first hour, you need to watch my Bitcoin analysis. In my Bitcoin analysis, I say 3 words or a sentence in 3 parts, okay? Then, if you comment those within the first hour and have liked the video, after that hour, I'll do a drawing. Whoever's name comes up, I'll show it in an analysis and say they've won $100. Then you go to the Binance Robot, to the inertia section, where you submit a ticket saying you're the winner. They'll guide you there on how to verify your identity. Basically, you need to leave a comment in a couple of places to make sure, and then you will get your $100 to do whatever you want with it. Alright, I'm planning to do this for 10 analyses. Okay, that's 10 times $100. So if you miss it today, make sure to be quick tomorrow and join within that first hour so you can be in the drawing. Doctor, this is the short position we opened, the safety valve of the month. I'm not closing this short position, in my opinion. It's fine even if the price goes back up to, say, 112,000 and this short position takes a hit, but as long as I don't lose it. This short position gives us the confidence that if Bitcoin wants to drop below 108,000, we've got a position ready. So, if it happens, we're set. If Bitcoin drops with this short position we have and it goes back to 112,000, we can clearly see the market trend changing when this short position gets triggered and takes a small loss. If the price turns around from right here and goes above 112,000, we have a good bullish trend. The trend has turned bullish. So as long as we can, we'll keep this short position open. We don't touch it. We don't mess with it. That's what I do. That's my risk management. If I stick to this behavior, it makes trading today, tomorrow, the day after, and even today itself much easier for me. Everything is clear. If the market wants to drop, we have a short position. If the market wants to turn around, I'll spot it faster and open my position sooner. Now, this could be on SOL, on BTC, or on any asset. If that lost level comes back up, if the price bounces back up from it, that's our confirmation of a trend change. Now, our first keyword is news. Okay, let's go to our first question. These candles are giving really tiny moves. Yeah, but for example, with dominance, the candles are always making tiny moves, except for those times when things go crazy. And the rest of them too. I'm saying their movements are all tiny, tiny, tiny. We have a really important resistance right here on the 59 week. Breaking this could give us a bullish trend and dominance for Bitcoin. Now, 60.04 is an important resistance, 61 is also an important resistance, and up to those levels. Breaking this 59.70 level tells us that Bitcoin is the center of attention. So, it gives us that, now, Bitcoin is the focus. If Bitcoin is coming down, it means a lot of altcoins will be in even worse shape. If dominance goes up, it means Bitcoin is performing better. Keep this in mind when opening positions. If Bitcoin is about to drop and dominance goes up to 59.70, these coins will drop even more sharply. Let me give you a general overview. All of these are coming back to their support zones. Forget about these shadows. Now, let's see, in 4 years, for example, or if we completely change things up, we've come and filled these shadows. But that doesn't mean the shadows will always get filled. Okay, so let's talk about this together and wrap it up. This one also gets filled, right? Sometimes it never gets filled. These sudden, irrational moves don't follow those made-up technical rules we have. It's completely outside the story. Some things just happened. So let's not keep telling ourselves which one is supposed to get filled. The reason it comes down here is because on the daily chart, we made a double top here. This is the neckline. Its size from here to here was 19%, so it wants to drop another 19%. Again, my summary was wrong. That's not the reason. Making a double top isn't the reason for the price drop. The real reason is that buyers weren't present. Sellers took control of the price and pushed it down. Until buyers come back, the double top is just a made up rule that you and I created for this chart just to give it some meaning and set a rule for ourselves. And with that rule, we can manage our capital and risk and get a proper win rate to risk ratio, okay? The reason for price movement isn't our technical analysis rules. Never forget that. The first day you think it's like this, that's the day the losses are going to start. Be very careful. A lot of people are coming back to this. If we want to drop, it won't be this much. A trend with this power, the previous trend has to start showing the weakness of the market trend, and that, well, the buyers come and take control. Meaning this range that the price is in now. $17 for Link, I don't know, AVAX at $20, and well, Bitcoin itself around $108,000. These ranges, these could be the same ranges where the trend might change for us, could help us, where buyers come in. I already told you the reason. This downtrend is weaker than the previous trend. If we get stuck here for 2 or 3 days, by Monday, the chances of going up are much higher than the chances of dropping, much higher. Now, all these altcoins are sitting on really strong support levels. I'm not saying we should just go and buy right now or anything like that. Buying here doesn't really make sense. We need to see a trend reversal first. We need to see that V pattern form on the lower time frames. I'm saying one of the signs we can look for to spot a trend reversal is that we have a sharp trend exhaustion here. The rest needs to confirm it as well. Okay? Alright. This in. You can go and really learn this yourself in the video I pinned for you in the comments. Because in the video I made about the strategy, I explained the trend direction really well. How do we identify the trend direction? The only thing we need to figure out in the market is the trend direction. It doesn't matter how much you throw at it. It won't make a difference. When you know the trend direction. Okay, all right. And if you pay attention, both Bitcoin and dominance are moving a bit in opposite directions. Meaning, when they're showing green candles, these guys are showing green candles. Bitcoin dominance is showing red for us. So, we're in a bullish move and altcoins can have a better correction. They can be early indicators of a trend change. And as long as our dear Bitcoin doesn't go above 112,000, doesn't go up here, which means 3% to 4% higher, we won't confirm a trend reversal yet. For now, the trend is still downward, but with a weakening downtrend. Look at this, and look at this, the amount of buyer presence here, and the amount of buyer presence here. This itself is very influential. I'll get to it. I'll explain it right now. First, let's go to total for a minute. On the weekly chart. Alright, let it read itself. The Ahmad limit at 3.57 is important, and it really is important. You can't bring this higher. Why? But it doesn't make much difference. We don't confirm it from this, that this wants to show us the trend. Total doesn't want to give that trigger for now. It's much easier to check Bitcoin itself. Total 2 is the same way. If they test this area here one more time, like fake it here, our setup will get really cool. What if we start right from here and go up? One more ceiling. One more ceiling. We need one higher low to set that ceiling. If that happens here, we completely change our outlook, go for long positions, and open trades. You have to do this really fast, or you have to be able to change your behavior really quickly because the market changes its behavior very fast. You have to be able to change your outlook, your position. Look, I've told you this so many times that we have to change quickly. What does Ajazadi say? He says, just like before when we didn't have confirmation to buy, we still don't have confirmation to buy. There's no reason to buy based on confirmation. This is a downward trend. We don't buy on proof of work. Inside proof, do you have a coin? Show me your entry point, your coin, write it down for me so I can see what you have and where you have it. Let me sit and look at it, think about it, and see what solution I can come up with for you. Tell me this. We gave USD, and this level was the one we talked about together. I'm saying here, entering is conditional and too early. If this level breaks and stabilizes above it, which stabilization happens after 5 points, then our downward trend will continue. Now, for the next short trigger, if you want to open a position, you have to wait for the break of 5.03. That means it could happen at the same time. A return to 4.96 doesn't give a long opportunity. Look, going long is really risky, okay? The most logical thing we can do for a long is to wait and see if this whole move turns out to be fake. Then here, quickly, with a big account, you open the first position because it's a long. Later, as the trend continues, and there's still a lot of room for it to keep going, we enter again, getting better positions with better stops and better risk reward. We catch better opportunities. I was just thinking about it again. Well, right now, there's about 14 days, a week, 2 days, and 12 hours left. For now, it's in a drawdown. Man, after a big red candle like this, it's logical to have just one candle. After a big red candle like this candle actually makes sense. In fact, it even shows us the weakness in the trend. I've talked about these daily candles 100 times. They're weak. This limited area is logical. It's really important. What should we do with those positions of ours? Our Bitcoin, our Ethereum, I did the math Ethereum, guys. The place I'd want to exit is below 3,494. You'd exit Bitcoin, not Ethereum? Yeah, if you do the math, I should exit at 3,494. That's my exit at that level. I'd suggest you guys stay in your positions up to 3,000. It's not a bad idea to still be in the position. Give yourself a chance. I mean, it's a good position for the future if the market is going to be profitable. Okay, got it. This is something important here. It's really important. I mean, I can say this is pretty much the last stronghold for the buyers in this wave. If this breaks, we won't have an uptrend anymore. This can't be fixed. If this breaks, we'll be out of the game for a while. If it breaks and confirms, or if it breaks and then fakes out, either way, there will be problems. Let's say you're out of your Bitcoin position. I'm out too, and here it's done a fake out. For example, on the daily chart, We dropped below 37,600, closed below it, and we closed the long positions we had opened from lower levels and exited. Then, if it quickly bounces back up, be happy, because with this V pattern, we'll open positions again, we'll go long again. Because here, this is giving me the signal that, time-wise, we might get stuck in a sideways box for a while. I want to get out so I don't pay more fees. I've already paid enough fees on the 4-hour chart. The data isn't giving us much on the 4-hour, right? For the 1-hour chart, below 176.72 should be your trigger to enter a short position again. And when it's going nonstop, no matter how much volume you're trading, you have to watch it candle by candle. What does it mean to watch it candle by candle? It means, for example, when Bitcoin approached this support level at 176.74, or even earlier, like Solana or AVEX, which currently struggles with this level and wants to break through. Let's say we want to open a short on AVEX with a 2% increase after this level breaks. That's not the right move. These coins follow Bitcoin up and down, and since we're at a very important logical zone, it's better not to get too caught up with altcoins, or if you do, do it with very little risk. If we reach this zone, at that moment, we check dominance. You ask, is dominance going nonstop? Okay, so you want to break this support here too, so you're not really useful if dominance is green. If dominance goes green when you want to break the support, then you're useful for opening a short position. What I mean is, candle by candle, this short position that's opened here, let me bring this up and talk about it here. Look, it didn't close. It didn't close. Here, in this candle, is our first close, right? So one position would have opened here with a 1% allocation. Then, in the next candle, it closed here, so another position would have opened again with a 1.3% allocation. But it hasn't reached the target yet. Your position isn't for making a lot of profit. This one is on Bitcoin, and it's just so you're comfortable in the future. In fact, if this position ends up being a loss and hits your stop, that's actually better for us. It'll make our lives easier in the future. As for continuing the short position, you can open it with the break of 177.3 with the break of this level. That's for shorts. For longs, for now, I'll wait until the break of the 176 range before I do anything. If it gives a strong enough reaction here, if it wanted to break through here, I'd already have set some alerts in advance. I'd set some alerts ahead of time. If this position gets triggered, it'll react here, and those who set alerts for this position will catch it. Don't open a position just because it's moving toward here. Don't open this one yet. Right now, it's still a waiting game. Let's see what happens with this support, whether it holds or not, because there's a lot at stake down here. This is really the last line of defense for this buying wave, okay? At this moment, everyone is relying on this support, but if you look at the domain, it's actually a bit lower than this. If it breaks, does it give a position? Yes, but since Bitcoin hasn't reached the important level yet, keep in mind that the win rate for this position is low. So, you mean I shouldn't open it? I'm just letting you know, the win rate for this is low. When you know the win rate is low, your hits are less likely to land well. You reduce your risk. Definitely manage your capital. All right, Will. Let's move on. For now, it's inside this box. Okay, honestly, some of it isn't bad. We just need one move for Ethereum to come back into the market. Honestly, some of it isn't bad. You could draw this key order line. But honestly, it's not that useful for us. It's not useful. It's really not that useful for us. Key order line, higher highs, lower lows. It means the market needs to form a structure here on the daily frame because the 4-hour time frame has started to build a new structure. I'm saying you can draw that same curve line, or you can draw something like this here. These things really aren't useful for your positions or mine right now. They don't really have much impact on our lives. If it goes below the 3,848 level, you can open a short position. You can, as long as you follow that rule I told you. Go check Bitcoin dominance and confirm it at that moment. What about a long position? It needs to go back to 4,868 and react to it. This line comes here. We'll open the long position a bit earlier, though. It's not like we won't open it. Let me just say, when it comes to Ethereum's upward move, you need to have a position at either 4,283 or 4,534, one of these two levels. Write it down somewhere, because it's possible I might be traveling or not around when it happens, and I won't be able to remind you again. So, jot it down somewhere. Thanks a lot for sticking with me through this video. Take the time today to watch that strategy video if you haven't seen it yet, okay? In the next part, I'll continue and show you how to better understand the trend direction using support, resistance, candlesticks, and volume. Right now, there wasn't a pattern on the Ethereum chart. Don't think I came and talked simply, used Ethereum, or showed what I knew. I redefined new tools learned, buyer and seller strength, presence of buyers and sellers, different cycles, supply and demand. I updated these. Why? Because once you get these concepts, you've learned the terms and you're dealing with them. We don't touch the short position on the chart itself. That's a separate setup. If it comes back and hits the account, good for us. If it comes back and hits the account, we quickly change our perspective and open a long position. At this lower level, you can open a short position, but yes, keep your initial risk low. And in these critical zones, it's really important to reduce your risk. Right now is not the time to open a position with high risk. You don't have any open positions behind this one. You don't have a profit chain going either. Our market structure is just starting to form. Our financial structure closes for a new financial cycle to start. So, it's really not a great time for you to open a position with high risk. USD. If it can, that resistance I showed you could continue as a downtrend. But the problem with the downtrend we have at this lower level is that the trend is very steep, and the first confirmation of a trend reversal can change everything. What was the last word? Was it subscribe? Subscribe, like, thank you for staying with me up to this point in the video. If you haven't finished, turn on your notifications.